I'm Imran Venka. I'm a South African chartered accountant and I'm a registered auditor. I'm the Director of Standards at the IRBA in South Africa. I'm also the Chairman of the Audit Committee of the United Nations. You know, I've been passionate about ASA all my life. And people often ask me, so why do you insist we should all read ASA? So I have a very interesting story to tell. I've been reading ASA since probably 1992. That makes me a 30-year reader of accountancy essay. And my dear mum used to keep unopened copies of ASA for me when I worked abroad. And when I got back to South Africa, she would give them to me as if they were a gift. You must read this because this is very important. And on my flights back to New York, I would open them up, read them, and I'd leave them in the seat pockets in the aeroplane, hoping that someone else would pick up the accountancy essay and be attracted to a profession in accounting. So accountancy essay is the journal of our profession. And I think that there are three really good reasons why. The first is that the accountancy essay covers the hot topics of the moment, and it tells you who is leading those topics. The second thing is accountancy essay is a window onto who the leaders of the profession are. And the last is that it is probably the easiest way in which you can chalk up your relevant CPD points and experience. If you find what you're looking for, accountancy essay is the answer. I think there are a number of benefits of working internationally. The first is that there is an incredibly high regard for South Africans in general and for South African chartered accountants. You can have a really big impact as a South African CA in an international institution, so you should feel confident about it. The second thing is that working abroad gives you insights into complexity and diversity that makes you a much better manager at home. People abroad have so many more ideas, so many more issues, and that strengthens you as a manager. And then lastly, you could have a level of influence in your current job, but imagine the level of influence you have if you're able to influence the direction of things overseas. So I've had the benefit recently of chairing an international project that developed the new ISQM2 standard. So this is a standard where I chaired the project and which is going to be used by auditors and practitioners, maybe across 100 or more countries across the world. So real opportunity for personal fulfillment and growth in being able to do those kinds of things internationally. Birding is my passion, and people often ask me, where do you start? So I say you can start right here and now. Pull up a piece of paper and start making a list of all the birds you ever remember seeing, and you'd be surprised how many you'll identify. Once you've started your list, invest in a simple pair of binoculars, get yourself a bird book, and then head out into your garden or into the nearest park and start looking for the next bird. Those 4 steps will get you into birding overnight. You know, I emphasize the role that reading has played in my life. And I emphasize the need for all students and chartered accountants to read a lot. But I am asked from time to time if I'm ever going to write a book. So let me let you in on a secret. I have 2 ideas. The first relates to international travel. I would like to write a book, more of a compilation, of all the countries in the world that Nelson Mandela visited and all the speeches he made in capital cities of other countries. It combines both my love and passion for South Africa and Nelson Mandela and my interest in global affairs, and I think it would make for an excellent coffee table book. The second book that I'm keen on writing links my faith to my interest in birding. And so I'm interested in compiling a book of all of the references and insights about birding in the Islamic faith. References from the Quran and the lives of the prophets, linking them to the lives of birds. And so that's a project that I'll do one day after I retire. Many people identify auditors with paper and green pens. But that's an old image of an auditor. The future of auditors are these auditors who are high-tech, have fancy gadgets, understand how these tools work, and are able to use this in new ways. So I think what's going to happen when we try to connect auditing with the digital world is, firstly, auditors are going to bring new skills to the job. They're not just going to bring accounting skills. They're going to have to understand some digital skills. If you bring those skills to the job and you give them a mountain of data, which is what the digital world is creating for them, a great deal of data, combining those two things could give us what? It could give us better audit. But what it may also give us, it may give us quicker audit. It may give us more regular audit, and it may give us deeper insights coming out of the audit. And that's the potential if you combine those things. Combine great skills with the data that's available. These are the things that can come out of audit in the future. Being a chartered accountant is demanding, and sometimes it may feel like you have a never-ending to-do list. You're facing deadlines and other challenges, but how do you bring balance to your life? So the analogy I share with people is the analogy of a table. And it's absolutely important that your work and your career constitute one big leg of the table. But alongside this, you have to have a leg that represents your family. You have to have a leg to the table that represents your faith. You have to have a leg to the table that represents your interests. If all of those legs are strong, you're going to be much more successful at your career and be a happier, more rounded individual in respect of all of those things.
Everyone for joining us tonight. So obviously I'm not going to be here long, but I think we're grateful for a few things. Specifically coming from South Africa, we didn't have to check if the venue's got a generator. And then I'm sure you are all grateful when you have to buy gifts for your family in South Africa and spend the money in rands there. I was talking to someone earlier who says they're going to South Africa soon, and they're also excited about the possibility of the upgrades in hotels they can make, because the rand is obviously very, very weak at the moment. So tonight we're here thanks to Standard Bank, and we're very grateful for you for gracefully hosting us. I don't know if all of you know, but we are obviously very proud to partner with a proudly South African homegrown company. And then Standard Bank is the ability to serve your South African offshore needs together with your onshore needs, together with your offshore inspirations. We've got Bruce and Sarah here tonight. For those of you who haven't met them, they look after our members in the UK. So if there's anything that you want to ask them, Bruce is there. I'm sure you met Sarah as you came in. And just a flow for tonight. After me, Rachel Lee from Standard Bank will just do a bit of an introduction. And then afterwards, both Milton and Peter from SAICA will just set the scene and do a bit of updates with you. We've given them each 2 minutes, so you shouldn't expect to hear for more than 20 minutes from them. And then I think the discussion in the panel is going to be, they're going to discuss a bit, but I think it's important to have the conversation with all of you. So please ask questions. As you wish. We've got a nice little ball that we're going to throw, and I think that's also maybe how we're going to choose the giveaway winners. So we've got lots of gifts from Standard Bank, we've got wines, we've got gin, all from South Africa. So if you catch the ball or maybe miss it, we don't know. No, I'm joking. We'll do a lucky draw afterwards to see to see who gets what. So enjoy the evening, and thank you for being here. We appreciate you spending your Monday evening with us. So over to Rachel. Thank you.
Hi there. I'll be super quick and just do a little bit of an introduction. So we're delighted to have people face to face as well as the streamers, but it's always nice to press the flesh. I represent Standard Bank Offshore, and I'm based on the Isle of Man. By offshore, we talk about the 3 islands. So we have Jersey, Mauritius, and the Isle of Man. Here in London, we have 17 members working, so there is representation here. But throughout our 3 offshore islands, we deal with everything. So from personal banking, credit, lending, corporate banking, we have trust and fiduciary services and investment services as well. So please enjoy the topic of conversation. Our CEO is going to be sat on the panel. He's able to talk the talk from an accountancy background, so enjoy there. But we'll also be around after for drinks, so if somebody wants to talk about clients, services, their own needs, then please come seek us out after. But thank you, and delighted to have everybody here in person and streaming. Thank you.
Okay, good evening, everybody. I'm Peter Faber. I'm the head of tax at SAICA. So tonight, there we go, see from our expanded transactional reporting. And it's a topic we thought was conducive to a discussion and a panel. And what I'm going to try and do is just set the scene. And the reason being is that we don't have all the answers and you're going to see why in quite a minute. What's coming. Some of it might look alarming, but I think that's why we're here, is to start having, I mean, we've been having these discussions in South Africa already with the members, but this, as you'll see, is a global discussion. It's not a local discussion. It impacts accountants globally, this discussion, and I think that's why these type of engagements. For our audience online, you are welcome when we have the panel discussion to I'll have access to the chat, so I'll facilitate that discussion. But you can post your questions to the panel, etc. And when we got the ball rolling, so to speak, at the front, we will take questions as well as to how we deal with that. So again, where do we start with this discussion? And I think importantly, we start from the beginning. So again, I'm going to try and set the scene, and the beginning here is, what are the causes? And I'm going to just try and see, what are we seeing as creating? And we see these as call it pressure points, or 4 pressure points that we're picking up. And the first starting is probably a political pressure point. We're seeing a financial system pressure point. We're seeing a climate change pressure point. And there's also a lot of fiscal pressure. And to give you an idea, if you look at the first one on political pressure, governments globally are under pressure to solve a particular set of problems. There's a big inequality problem. In the UK, we've even seen things. I mean, I had the example here of the nursing union going on strike for the first time in 106 years. We're seeing it in every single country. And we're seeing that pressure has been building. And it's not that it happened overnight. It's probably that we're just seeing it now going to a situation. Stats on inequality in countries, strangely enough, between countries it's decreased. In country, the problem is there is a political issue that politicians need to solve in some shape or form that is driving this discussion that we'll deal with. There's also a financial stability. I think the first real big trigger happened back in 2007 with the financial crisis. We're seeing this thing hasn't really gone away to a large extent. It is bubbling up, and there's a lot of stuff that's underpinning, but a lot of concern, I think, to a large extent, regarding the financial system. And some of the responses are done, call it in the name of protecting the financial system to a large extent, because it underpins economies, it underpins payment systems, etc. And previously, I think we were all comfortable leaving that to the banks. I think the regulators are now clear they're not going to just leave this into the banks. And we're seeing that the financial stability of systems impacts economies. So in 2007, it's doing it now. If everybody's seen just the bank failures in the US, etc., how that's hit the global economy and the knock-on effect of that. This concern is a real concern. And there's obviously a lot of discussions in these sectors happening on various things. But it does create a pressure point that we'll see what's happening. The other is a fiscal pressure point. Again, talking about governments funding themselves, funding their activities, and also spending. And a lot of that spending, obviously there are certain political views. I got old Keynes up here, anti-cyclical spending that was very popular in 2007. But what you can see here is one of the big current pressure points is global debt. governments and people have got into debt. We're all spending way more. Global debt is at the highest level since the Second World War. That's the reality. And if you're seeing a lot of countries starting to default, we're seeing that increase, countries defaulting. But it does mean that governments are under pressure to fund themselves. Also, the size of governments, the cost to run governments has exploded in the last 40, 50 plus years as a percentage of GDP. So there's a lot of money in there, but that means that there's a pressure point to get more money to fund the activities of government. And that's a global narrative, unfortunately. So that is creating a pressure point as to what needs to be achieved to make that realize. The fourth pillar that we're seeing is climate change and the impact there. And obviously there's like most things, a carrot and a stick approach to this. There are incentives, etc. on some sides. There are fiscal risks to some sides. Governments are seeing this actually costs money in countries. It can harm economies, etc. But there's also a stick approach. And the stick approach to a large extent is the other side to it that we're seeing. And to a large extent, Milton, and we'll focus on this because this is the new kid on the block, even though it's been a concern for quite some time. When it comes to impacting the audience here, it is, call it, in new grounds. Even the creation of a global standard setter in the space is only a recent development. There's still a lot of politicking, who's going to be in control of all those standard settings, etc., and reporting that's happening in the space. Obviously, there's a fiscal element, but a lot happening in this space. And Milton will go and give us a bit more of a background into this and what's happening in the standard setting space. So I thought I'd have this. So for we saw the pressures. So the opposite, if those are the pressures that a lot of governments and regulators and standard setters are facing, there is going to be a reaction. And I think that is where we are here tonight, because that reaction to a large extent is where we deal with transactional reporting. So a lot of the points we're seeing aren't new discussions. What we're seeing is the reaction to, so things like opaque structures, beneficial ownership, anti-money laundering, terrorist financing. These are not new things. What we're seeing is an expansion of the who and the what, and we'll deal. But the trigger to this, to a large extent, has been the modernization of governments. So even though these discussions, etc., have been happening, the regulatory, to a large extent, has been happening, especially within the world of banking, because of governments modernizing to a large extent and systems and data modernizing, we're now seeing this concept of transactional reporting expanding further and further to other non-traditional constituencies. And to that, I thought, when I thought about this analogy, when in South Africa, I mean, in most countries, we all had, call it the video shop or the DVD shop. We went and you hired something for the weekend or something for the day, and you would take it back. And when things like Netflix, etc., came out, everybody was triggering that would be the death of that platform. And strangely enough, those things kept on living beyond the creation of digital platforms for viewing. What was the death knell was, in fact, broadband. It was broadband internet that actually killed it. As soon as broadband rolled out, it literally, I can remember in my own neighborhood, it was literally less than a year after broadband hit our country that every single video shop closed down. That was the trigger or the real consequence of, and I think that is some of the discussions we'll have tonight, is that we look at what the actual triggers are in looking at this. The other thing is, just because governments can impose and can access technology, etc., it doesn't mean that they will implement this effectively or efficiently. And I think the people in the room, that's sometimes our frustration, is saying, but what have we achieved? Have we achieved the goals? Have you spoken to us? Have you engaged us as our constituency? Have you actually solved the problem? And when it comes to data, like with most systems, when we see systems, the problem with a system is once it's in, the error rate goes down, but when there's a failure, it's always a critical failure. When a system goes down, a big system, for one day, it's usually chaos because everything's automated. Whereas if it's manually, the mistakes are bigger, but it's seldom that the whole system fails. So that when we deal with technology, and we're seeing that more and more as governments adopt modernization, etc., that these are also not eventualities they cater for. I always said with the banks, if something happens in my bank account, I get an SMS. There was something wrong in your bank account. The next SMS I got, it's corrected. Back in 2016, we had both in the Canada and Australia, strangely enough, within 2 months, their revenue services going offline for a week. There's not a single piece of legislation in any of those countries, including South Africa, that deals with what happens when revenue goes down for a week. There's no extension periods. There's no notification system. No government that I know of has legislated for what happens when a digital system goes down. And these things happen. So the use of technology is not necessarily given. So what we're going to talk about is the reaction, is the who. So traditionally we've had things like real estate, banking. We've essentially had auditors within the space. So within the financial, the transactional system, so AML, etc., they have a term called designated non-financial business and professions. And at the bottom, unfortunately, the chairs are in there, lawyers, notaries, and sometimes certain accountants. What we've now seen is that company and trust service providers have now been included to a large extent by the FATF. In South Africa, this has been rolled out as a set of legislation, but this has already been hitting. This is driven by the G7, so it will hit in some other countries like the UK, Canada. This has been in place for a few years. There are sometimes small differences, but the principles are exactly the same because it's driven out of the G7. It's not driven out of specific countries. And again, this is done in the name of protecting the financial system, but that protection has expanded. It started with anti-money laundering, it went into, expanded to organized crime, and now we're seeing terrorist financing added in the last 15 years to that. So just a list of all the people in that last group, and you'll see to a large extent a lot of these things are traditionally normal services, accountants and small businesses, etc., deliver, and consulting businesses, that these requirements. So the question is the who. Why did we get to where we deal with accountants and transactional reporting? And this was something in 2020 we invited to the National Tax Committee, Judge Dennis Davis, who head up the Davis Tax Committee as well, looking at the tax system in South Africa. And he made this comment: for every avoidance or evasion transaction structure, there's an accountant somewhere in the chain of events that needs to capture and report those transactions in some shape or form. So when we look at about transactional reporting and getting data, well, accountants are actually, and accountants in any capacity, whether you're the CFO, etc., and we'll deal with that, exactly that. Somewhere there's an accountant involved, either in the client side, in the business side, or on the advisory side. And I think that is why the profession is so impacted by what we're seeing coming on road. So I can't show you the same there, but again, continual expansion of the transactional reporting is that you are impactful. Why regulate accountants and expand all of this to accountants? Because we know you have an impact in various capacities. It makes sense to then expand all of this. So there's a lot of unanswered questions. I'm not going to go through all of them, but the concept of, and this is actually coming from our audit regulator that they're having on global, if you touch it, you are it. And the concept essentially is, historically we said if you're in regular auditing, we'd have an auditor and the auditor would be responsible. The thinking now is starting to happen, if you do anything like consult or advise an auditor, you're part of the audit team. Whether you're independent, etc., you're all part of it. And if you touch it, you're in it. Real-time reporting, this is starting to become a real issue. We talk a lot about data management. So the one thing about technology is governments see this as an ideal to get to real-time reporting, which is the panacea. Getting there is a totally different exercise. And that challenge, whether it's real-time payroll reporting, real-time AML reporting, real-time VAT reporting, real-time customs reporting, that's what we're seeing in the discussions. The reality of actually implementing that is something totally different. Again, we're not going to do so. The other part, and that's where Milton's going to come in, is that the private sector standard setters like the IFACs, the ICAWs, the SAICAs, etc., they're being posed the same questions and challenges as the public sector legislatures. And they too are coming up either with code requirements. If you take something like, I don't know of you who've actually seen the new exposure draft on aggressive tax planning coming out as a code requirement. If you haven't, the comments close the 18th. That's probably, since NOCLAR, the biggest impactful exposure draft code that's going to apply globally. Essentially what it's going to do is going to compel both advisors and members in business to apply a certain methodology in reviewing, instead, including things like a stand-back test, where you actually have to look at how it impacts stakeholders in anything that they've defined as tax planning. Quite a big and onerous type of proposal to make on. But these are the types. NOCLAR was the other that you saw back in 2017 that was rolled out globally. As I said, Milton's going to, with the new kid on the block on ESG, etc., and talking to that part where a lot of reporting changes are going to start happening. So that's just to set the scene for tonight on the discussions. Milton, I'm going to hand over you to get to the private sector standards. Thank you.
Good evening, everyone. It's good to be here. Thank you again to Standard Bank for having us, and great to meet everyone. I'm Milton Siegel. I'm the Executive Director of SAICA and the Standards team. And we have a important role in terms of SAICA, as all the technical thought leadership guidance comes out of our team. The one interesting thing that I just was thinking as Peter was talking around here is that within our disciplines, accountancy, audit and assurance, ethics, public sector, corporate reporting, this is all coming together here. These type of reporting requirements are going to be touching accountants in many, many ways, not specific to, as Peter mentioned, just specific to an auditor or specific to a reporter, etc. So interesting times indeed. I'll be here to talk about, as Peter calls it, the new kid on the block, which is really the changing in reporting requirements. And this comes at a time that the landscape of the accountant is evolving, the mandate of the accountant is evolving, the work that accountants do are evolving and expanding at a very significant rate. So let's go back 20 years, 15 years, 30 years, back at the day when you were studying accountancy and you kind of had the big four, as it was known, MANAC, FINAC, tax, auditing. You had tax was tax, auditing was auditing, financial accounting was IFRS or SA GAAP maybe before that. And everything else that wasn't that ended up being management reporting, management accounting. It was the residual value. It was everything that you couldn't kind of find a bucket for was the residual value approach, kind of the goodwill of its day. Whatever you didn't know what to do, just leave it in goodwill. And we've seen such evolution of that. We've seen evolvement and evolution of IFRS reporting, where to call yourself an IFRS expert today is no mean feat. I mean, there is a serious amount of IFRS. If you still look at the students who use the sort of paper versions of all the handbooks, they've got 5 or 6 just IFRS handbooks to look through. You know, you need a trolley just to push your IFRS. But that's just one of the languages. Now, for many, many years, as accountants, that was our main language. IFRS was the global reporting language, and it still is to an extent. But then they came up with the concept, as part of the evolution, of management commentary, which originally sort of came out in around about 2010, which was a sort of non-mandatory extra type of reporting that allowed management to give just more of a narrative to certain of the ratios, certain of the financial statements to help guide the user there. And that was a very kind of nice to have. Not many people ever applied it. But the spirit of it being is that you're doing it, and what the management is saying is under the auspices of IFRS. It was protected by IFRS, and therefore the auditors would have sight of it, and it was good information, and it was useful. Then we evolved to sort of annual reporting and the submission of an annual report, and the compliance issues with regards to the CRPC as an example, or to the registered authority, and those kind of contents and extra requirements that the annual report required. Certain contents that don't have to be in the audit report but need to be in the annual report, which is your director's speech and your chairman's speech, and those any other information you'd like to share that isn't strictly IFRS or not, doesn't form part of management commentary, and all good information to have there. South Africa was probably the global leader in integrated reporting. It was born in South Africa. It was born in SAICA. Prof. Mervyn King, who's still active today, and we still have a lot of dealings with Prof. Mervyn, really created this concept of integrated reporting, which was this talking or reporting from an integrated perspective that looked really at value, the value chain, value creation, value preservation, and even value erosion. And it became a kind of separate reporting framework, and it established globally at the IIRC, globally, which really took reporting to the next level. And to an extent, it was very complementary to IFRS, because kind of what wasn't covered in the IFRS financial reporting was covered in the value type of reporting. Good information, transparency, a different perspective to a different multi-stakeholder, multi-capital approach. Very cool reporting. We like that. And the sort of days of reporting in silos kind of disappeared because of the integration thereon. That led to more complexities about audit and what do we audit and what don't we, and is there just assurance, and is it a limited amount of assurance, and what is limited assurance in an integrated report, because there's still a perspective today that you can't really give a full audit on an integrated report because you had to be there for the decision making. You had to have attended every single board meeting, exco meeting where the decisions were made so that you could verify whether, in fact, that's the way you're reporting it. So it's kind of reporting on a process, potentially, rather than a specific number. Yes, you can check that the financial information ties and cross-checks, but that's something that your trainees will do. So that expanded. Then the concept of limited assurance came on to say, well, we'll kind of look at a little bit of it and we'll deny ever having seen it if something ever goes badly. But we have seen it, but I can't tell you what's in it, but I've seen it. So we had that evolvement in assurance. So as reporting evolves and assurance evolves, the complexity and the reporting requirements change and around it. And relatively in a comfortable space now. There's enough history behind it for sort of the market to dictate what's decent reporting. The stock exchanges look at it. In South Africa, the JSE, the Johannesburg Stock Exchange, plays quite a big role in the kind of what's going through the integrated report, etc. What's below the slide there is in capital letters now, sustainability. If there are any eager beavers in the audience, I'm glad to believe the slides will be distributed afterwards, so you can just tick that box as well. But sustainability reporting is a whole new global language. It's called the alphabet soup. These are not swear words as far as I understand. TCFD, SASB, IRC, VRF, GRI, ISSB, FRAG, these are all various frameworks that all want to do the same thing, that talk about reporting and climate. But the problem with that is I've just listed 7 different frameworks which are different. So you have an entity that reports, one using a TCFD standard and the other one using a SASB standard. They both talk about climate, but they talk about different things, different matrix, different variables, different processes. Which one is better? I don't know. Who are you reporting to? I don't know, to your investor, to a regulator, to your potential client. You know, it's kind of like beauty is in the eye of the beholder. So this required, from a global perspective, to consolidate this and put a bit more information. The world turned to the accountants. You know, the world said, help us all. And then at a global level, the ISB, the IFRS Foundation, the ISB just down the road here. It's so nice to be in the UK and say just down the road, because when I do this in SA, I say, you know, the guys in the UK, just down the road realized this need, put together through the IFRS Foundation a global standard setter called the ISSB, a whole new entity being created that requires serious finance, serious plans, serious backing to create this global sustainability board. And they've done this thing. It was announced at COP26, and really within 18 months, these guys have came and rolled out, created a board, created an entity, and are about to release their first 2 international sustainability standards, IFRS 1 and IFRS 2. What IFRS 1 is trying to do is put a sort of competency or reporting framework together, like we know in the old days, AC 000, IS1, the conceptual framework for sustainability. I can assure you that is no mean feat. That is something that is so hard to do. And we'll see in the next couple of weeks how successful they've been. There's a long journey ahead. But they've done this in like a 2-year lead time, which for a standard setter is extremely impressive. And I think recognition should be given there. IFRS 2, they decided as part of their consultation that the first standard will be looked at is climate reporting, climate first. That took a lot of criticism, particularly from the EU, because you can't just look at climate. It's the whole ESG ecosystem. The perspective of this board was climate first. And I think from a South African perspective, we've seen the effect of this. There was a period probably about a year ago, maybe April or so, 2022, where you had devastating floods in KZN, devastating, like you've never seen before, 200-300 kilometers further away in the sort of Eastern Cape, Port Elizabeth area. drought. So climate's real. So climate first, that's the approach that they've taken. This is about to hit. They've already said the effective date of these new standards that haven't even been launched yet is 2024 application. Some countries, like for example Nigeria and Zimbabwe, have said, yes, we're adopting it, we're going ahead. I think that might just be a marketing exercise, because how do you actually adapt something that hasn't been rolled out yet? But I mean, there's a country perspective, there's a political element to this too. What they have done is they've done a magnificent job of trying to take the best of everything. Their objective was always not recreate the wheel, but let's try consolidate a global corporate reporting environment. Okay? However, there's risk to this. You're now creating a third framework. So you've got your financial reporting, your integrated reporting, now you've got your sustainability reporting. And those people that are closer to integrated reporting understand that often ESG and sustainability is fundamental and part of it, if it's part of value creation, value preservation. So we're starting to confuse ourselves here as a profession, but remember the accountants, us, have been tasked to go ahead and roll out this thing. They're already moving on to their future agenda. They haven't produced their first two standards yet. And this is progressive. I'm saying this in a productive way. These guys are going ahead. The agenda just came out. They're asking their users, tell us what to do next. There's biodiversity. There's different type of risks. There's carbon, etc. is coming out. They're saying, tell us what to do next. The majority of the accountants out there are saying, tell us how to start, never mind what to do next. So the rate of evolution, the burden on the accountancy profession is growing, and it's growing quickly. Remember, going back to, well, certainly my university days, Manac Fanac tax audit. Not sure which bucket this is falling into, but I can't find a home. I'm going to have to stick it in Manac and just hope it doesn't come up for a lot of marks. I don't know how else to do this. And there's money. There's a lot of research going on here. And as SAICA, here's the SAICA flag for a minute, we've been a part of a lot of these reach outs and this work here. And it's a great opportunity for accountants. We've seen a lot of newer, younger members reaching out into this new world, which is exciting for the accountancy profession. Here's their project plan. I mean, these guys have got like 2-3 objectives a month here. I mean, we're talking by already their agenda consultation for the next sort of period of work to 2-3 years is going to be closing in June. So the consultation for it, SAICA's part of that. We're not there yet. We'll get our comment letter probably about 45 minutes before closing time. There's a wide range of consultation we'll be doing. And at the end of September 2023, and maybe that'll be shifted by a month or so, they will have defined what their workload is for the next 2 to 3 years, 5 years, and how that will roll out. We've got a lot to catch up on, and we've got a lot to go forward here. So now we've got to bring balance to this. There's been a lot of significant progress being made. There's progress being made here, but we haven't had the real discussions yet. Who's reporting it? Who are we reporting to? Who's going to adopt it? Who's not going to adopt it? Is it a stock exchange thing? Is it a government thing? Is it Parliament? Is there, in a South African context, is there one easily identifiable piece of legislation that will dictate it? No, there isn't. Is there a body that will adopt it? Not currently. So as a profession, certainly from a South African perspective, we are recognizing that we as accountants, as the profession, will probably have to take this thing forward. Because if we wait for Parliament to take it on and the legislation to take it on and the regulators to take it on, we'll be so far behind the goalposts. If you look at that graph on the previous page, we'll be so far behind there we might as well not even start anymore. So we, from a South African perspective, will be driving and leading that conversation by bringing all the role players and decision makers into it so we can have a decision around the table as to direction South Africa. Again, the world's looking at South Africa because of our expertise in non-financial reporting. So what a time to be alive, an unbelievable time to be an accountant. But this is just one of the challenges. To what Peter was talking about earlier, the extra compliance, the risks involved. At some point in time, your sustainability and your different products that you enter into and your instruments that you take out are going to have tax consequences. They're going to have a tax decision. There's going to be incentives there. There's going to be advice that you give as an auditor or advising an auditor that's going to put you into the, are you now within the ambit of this new registration, of this new application? So the sustainability area is a great opportunity. It's a brilliant opportunity. The world needs it. The accountants have been given the mandate to go take it on. But just remember, reporting is the end product of it. You're reporting on the end product. You need systems, you need processes, you need data. Rubbish in, rubbish out. Peter was talking about if the system's working but this data's rubbish, it's all rubbish. It's not just isolated rubbish, it's total rubbish. And in the lack of an absence yet at a global level, as well as at a local level, of a defined process mechanism, a lot of onus on the accountants. Peter, I think you mentioned earlier on, there's those two words, professional judgment. We know that it's intrinsic to our code, it's intrinsic to that. We are going to need to be applying so much professional judgment, but now potentially have enough evidence to support the processes that we got to in applying the professional judgment. And I think that's where the change is happening. I think I'm done for this part. Thank you very much.
Thank you, Milton. So I think to move on to the panel discussion, let's welcome, let's go ladies first. So, oh, she's at the back, she disappeared. So welcoming first is
Never mark.
Tracy Brophy. So Tracy is currently a tax manager at RMPLC, but she, prior to her life coming to the UK and becoming a local, she was actually in the banking business for quite some time. And she was also our National Tax Committee chair for quite some time as well. So somebody well-read in a variety of disciplines. Tracy, welcome, and thank you for agreeing. You can
Pick a chair.
pick a chair and a drink and
Have my drink.
let's have a chat. Secondly, from Standard Bank, we have Will Thorpe, Chief Executive at Standard Bank Offshore. And hopefully we are going to get Will to share some of his thoughts. And as somebody looking at it from this side of the pond, again in the banking system. And the reason why you can see we're bank heavy is a lot of the obligations we're talking about automation, risk identification, monitor, sign-on requirements, etc. The banking sector, when we had this chat in the pre-briefing with Will, he says, well, the stuff you sent us to, this is old news. It's old news for the banks. It's not old news for the other 1.9 million accountants globally. And that's why we said, well, let's have that chat and that insight so that when we see the wave coming, and when we had a meeting with our members in business national committee, they said exactly that, and we'll unpack that a bit, but all of this is coming, and it's coming at quite a pace from everywhere. How do we deal with this? And I think that's some of what we're trying to unpack. And then last but not least, Milton Siegel, who has already introduced himself, so let's then move on to that. And so again, invitation, if we can have the microphone introduced into the audience. And then we'll also invite, as I said, I'll be monitoring the questions, so I'll try and host this for our online members. That we, then if you've got questions, you can hold them, we'll go through some, and then we'll revert to you. Again, this is an engagement. You saw a lot of the unanswered questions. They are not necessarily answers here. We are going to go on a journey. Some might think it's a scary journey, but let's see where we go.
Go easy on us, Peter.
You didn't tell me we were going on a scary journey.
That's why you're here, Will, because with
That's
the
why
banks
you're here.
will take us.
It wasn't in the briefing, Doc.
No.
So Milton, starting off, I think from a member, this is a member event, obviously from SAICA's side. What is SAICA doing to prepare the members in facing what is coming?
So I think, Peter, there's a couple of things that we're doing and a couple of things that we need to do. First of all is sessions like this, roundtables, discussions, getting information out there. It's not a case of willingness of people, members, not wanting to comply or not wanting to do it. There's just a lack of knowledge at this point in time. So one of that is knowledge. We've been doing some webcasts and webinars, and really as information comes out, we get it out. One of the things we do well at SAICA is we do advocate well, and we do have a lot of networks and people within the networks. So we've had direct dealings with the CIPC, with the Commissioner, with the legislators, even with the regulators like the RBA, lots of discussions with the stock exchange, where we have these open conversations and try to bring on a member view. Again, with the knowledge of that members want to comply, and we will comply, but we need to understand what these requirements are. And in the lack of an environment where there isn't absolute clarity or isn't absolute certainty, as an example, when the one piece of legislation was passed effective from the 1st of April, the system was not yet capable of handling that information, and you had accountants sort of submitting information like an Excel spreadsheet and saying, what I'd like to disclose the following, sort of from a beneficial ownership perspective. So it's that type of work. It's the continual advocacy. It's also seeking to, as well as educating, it's seeking to promote this skill set to the membership. It broadens the skill set of the membership. There is, as we were saying earlier on, some opportunities, a lot of opportunity for the membership here to tackle this relatively unknown perspective. So that's some of the work that we're doing at SAICA. But Peter, remember, SAICA is not a person or a party, it's a member institute. And for order for SAICA to be successful on that, we need the members to be successful. And we need not just the members in this room or the members within our committee, but we need the membership of about 54,000 people to take this on board and work with it.
Tracy, a lot of the focus has been driven in the financial systems on especially anti-money laundering, terrorist financing, organized crime. And we've now just told the members that from going forward, they won't just be part of the self-monitoring, or just on reporting as and when, they'll actually start forming part of the monitoring framework. How big of a wave is expanding from just supporting suspicious transactions to actual active monitoring?
Peter, I'm assuming that you're referring to my previous life in banking. But I think, and we can probably talk a little more to this in terms of where banks are today, but this is a journey that the banks have encountered probably the last decade or longer, where they had to start reporting on transactions because banks were the first target in terms of how do you bring transparency to the global economy, how do you follow the money, how do you catch terrorists, how do you prevent the funding of that type of activity, and it generally always goes through a bank account somewhere. So I think the banks have been at the forefront of transactional monitoring, but if we take a step back, the banks are a very regulated community. They have a fiscal duty, they have a responsibility because they have our money, and they are accountable to a regulator. So I think in terms of getting the job done, banks were the right starting point because they are used to doing that. They are always accountable to their regulator. If they get it wrong, they will lose their banking license. The stakes for the banks have always been incredibly, incredibly high. So the option of getting it wrong or not even starting on that journey wasn't available to them. What we're dealing with now is accountants who, we have all signed up to a moral code. Why did we choose to become chartered accountants? I mean, I for one thought it wasn't just, travel the world, it's more than that. I'm doing this because I want to, I enjoy it. I find it quite exciting. I know I'm a nerd. But the idea of the code, of that moral responsibility of being, ethically responsible, showing your integrity by virtue of who you are and what you do, is why we're here. And we don't necessarily in our environment as accountants, be it in audit firms or in business, have that regulatory environment behind us. We've never had such a steep need. If we look at accountants in small business practices, you don't have the funding and the capital base behind you that the banking industry has had. So this is a huge journey and it has to start somewhere. And I think it's something that, from SAICA's perspective, you're absolutely at the forefront in terms of driving it and encouraging it. And everything that Milton has said, make the members aware. because it has to start somewhere, and it's not just because it is regulated, but it's I think it's a tougher journey than what the banks have encountered, because the funding of it, and also the regulatory uncertainty. You've said, who are you reporting to? What does it need to look like? That's ever evolving. I think in the banking arena, that has probably been better defined from a banking regulator perspective. It's a journey, and I think everyone has to start now. I think we can learn from the banks. I think the banks can share that journey, but we need to be cognizant that there is no option to fail. Like, you have to get it right, not only morally, but from a regulatory perspective.
So, Will, when we did the briefing, you made the question that was posed, and I think that's an important part of this is, well, the first comment was, all of this is just compliance. It's just a cost. And you made the statement, you think it's a competitive advantage. So maybe it's share your views with the audience, how you see all of this, because when we see this, we see it's the end of the world, we're going to incur all this cost. And from a corporate perspective, you said, well, no, I believe this is a competitive advantage in all of this coming into being.
Good. So I obviously need to not speak so much beforehand, so you can quote me continuously. So, by the way, thank you for having me up here, and welcome everyone. Thanks for joining us, and to those online as well. So yes, I did say it was a competitive advantage. So in relation to the world of compliance, making sure that you comply with the CRS reporting, making sure that you comply with onboarding requirements of compliance is tough. It's something you have to take extremely seriously, and as we've just heard, it's a license requirement, and so therefore we see it as a license to operate. So if you don't do this right, then you have a serious issue, and that in the banking world, it results in material fines, and ultimately it could be a loss of a license. And so it's a competitive advantage because you need to be good at it, and then your competitors, a lot of them will not be as good, and that is bad for reputation, it's bad for client experience, it's bad for your costs of your business. And so if you don't understand the regulation well, if you don't automate it as much as you can, if you don't concentrate on your data to make sure that the data that you're reporting is accurate, then you can result in fines, you can result in having inefficient processes internally. And so, yes, it's definitely a competitive advantage because there's lots of companies out there that don't take it quite as seriously as they should and end up in trouble as a result.
Milton, one of the questions that comes up from all of this, every time we speak about compliance, and it came out yesterday when we had a dinner or lunch rather with some of the members here, but also in some research we've recently conducted on training officers, etc., and trainees, is the issue of our profession's sustainability, especially the small guys. How do we, when we roll this out, a lot of this does not have thresholds. It impacts small professional practices, but it also impacts small businesses that happen to have a member that happens to be part of a professional body. It now suddenly has an obligation that nobody else in the industry who's not part of that profession does not have. How do we go on and actually look after so-called the little guy in this, whether it's ESG reporting, whether it's tax compliance, whether it is AML reporting? How does the Institute go about looking after the little guy?
Yeah, carefully is probably the one-word answer. As it is, we see, and Tracy made the point earlier, is that the big guys, the big balance sheets, the people with systems and processes will generally be okay, have more appetite for it. We see the smaller practitioner, the smaller client, is the client that really kind of just wants to do the basic and the fundamentals. And what we see also as an example are kind of a lot of the sort of, from let's say a consulting perspective, people have withdrawn from audit because they didn't want the burden of registering with that and those sort of compliance, and therefore sort of stepped away from any kind of assurance type perspective into advisory and consulting, which won't help them in this perspective now. So I think it comes down to culture. I think it gets down to behavior. And what we don't want as an institute is that we land up reacting to this by way of the disciplinary process. We will have to, and there will be transgressions that will happen in the future. I think there's no doubt that will happen. And therefore, from that perspective, there will need to be disciplinary consequences to it, as there would be in any other violations that come across. But that's not for thinking now. That's something that you've also talked about a little bit in your introduction around the role of an institute that we need to play in that, and this concept of sort of asking the private sector and the professional bodies to assist with this regulation, because the regulators themselves won't be able to monitor 1.8 million accountants. If you go to IFAC, and I attended an IFAC council meeting a few weeks ago, the world, according to their research, needs 10 million accountants. And you can't possibly regulate 10 million accountants. That's not going to happen. So the self-regulation will need to happen. I think the ability to use judgment will need to be something that we work on, that we put guidelines in place for what is acceptable and what's not acceptable. And we try to standardize that according to processes. That the SME, I think the smaller practitioner community will need to align closer together, and we can support that through discussing these common type of challenges, regulatory behavior, reporting that they do need to do. I think well, Peter made you bring up the point of a competitive advantage, etc. But with this extra kind of regulatory reporting, there will be, more documentation that's required around what your considerations were, who was affected, what was the strategy, what was the tax implication. And that reporting is and transparency is more out in the open, right? But with that, particularly for the smaller practitioner or the entrepreneur, that being out in the open is potentially a risk as well, because you're, one, exposing yourself to what you've actually done or reporting what you've done to a reporting environment. The second is that I saw what my competitor did or what their thought processes was, and they either got burnt or they didn't. We don't know yet, but we want to use an alternate strategy there. So there's some clever maneuvering that can be done within, I think what we might find within the smaller practitioners is little boutique kind of products being rolled out. But I think the generalist that kind of does a bit of consulting, a bit of tax, a bit of advisory, I think there's going to be a transition to more specific kind of work that gets done, where you kind of learn your model, you learn your system, you put your processes in place in the absence of a billion-dollar balance sheet to help support that and do an integrated system. So I think we'll have these more focus areas. But let's kind of use the general practitioner example, like in the medical field. I think that general practitioner who kind of looks at your eyes, nose, throat, etc., and gives you that basic first line of diagnosis, I think that's going to change. I think we're going to see that changing, where even your general practitioner is going to have pockets of I'm a general practitioner, but I focus kind of in the lung area. That's kind of where I think my expertise is, because of the risks of not being fully up to speed with other areas. So that's probably one of the areas that we'll have to work with, but it's going to cause more challenges. It may probably lead to some of the smaller parties maybe needing to merge together, to work together, where you may have, instead of, let's say, a small consulting firm that does a little bit of everything, you might have 3 of these firms ultimately probably leading to join together, where they each have their pocket area of specialism, but together they form a better product. So sort of joint ventures, joint arrangements may be the way to go going forward. But it is a slightly murky road at this point in time.
So when we were on a flight over here, we started some of the new AML requirements and even the future, they call the mandatory reporting requirements for CRS, or the common reporting standards the banks usually do. There's a new proposal coming out of the G7 that essentially will say if you got any advice or you gave any advice to circumvent that, so all your tax practitioners, etc., you now have to disclose that advice to the Revenue Authority. So that's already driven from that side. And when we had the discussion coming on, Milton made the comment, that sounds like some immigration cards, those landing cards that have a question, were you involved in terrorist activities? And you have to tick a box, yes or no.
Do you plan to commit genocide?
Yeah.
It's a real question.
So we're bringing in a lot of new, call it requirements, where you have to essentially, that little game where you play 1, 2, 3, block yourself type of thing. So it made me also think about a discussion Tracy and I had when NoCloud came out in 2017, so going back. And she asked the question, well, does this mean that if I'm sitting in a transfer pricing meeting and we had to do a transfer pricing study, but the benefit is so low, we just didn't do the study. So there's no benefit to it. Does that mean we now have to go raise this with management and disclose this to revenue that we didn't tick this box of doing the transfer pricing study, etc.? And Tracy, now that you're in corporate, in business again, given these, call it self-disclosure and is this viable in business? Do you talk about taking on that ethical challenge? Is this an ethical challenge that business can actually do? If we look at both SSA and AML tax to say, well, we are busy with a scheme to avoid CRS. I am reporting this to revenue. Is this something that you feel business can actually, is there that from both a competitive side, etc., that they can actually do?
Peter, if I'm understanding you correctly, if you're saying how will business respond to this in terms of NoCloud, I think it should be exactly the same. I mean, an irregularity is an irregularity, and no matter where you are in your level of business, whether you're a financial accountant, a financial manager, a financial director, or the CEO, the responsibility remains the same. If you come across something that is an irregularity, it needs to be rectified. This is just going one step further. So from a CRS perspective, where the world shares information, it shares it via the banks, it shares it via the tax authorities, are there ways that people have dreamed up to avoid that type of disclosure? Of course people will do it. It's human nature. What do you do when you come across it? Well, you should probably have been addressing it. I think this is just going that step further from a regulatory perspective to say, well, you're absolutely mandated now to address it, to speak up. I mean, NoCloud's been with us for many years, and it was something that I think we debated, heated debates at the time in terms of, will this chase everyone out of the profession? Why on earth would you want to become a chartered accountant when there's this requirement hanging over your head? And as far as I'm concerned, I think the requirement's always been there. It was just a message out from a global perspective to accountants in business to say, well, let's remind you of what is already there. This is it's a morality issue, it's a code issue, and it's just bringing it to the fore that it's not only incumbent on the audit profession and the accountants, it applies to members in business. And honestly, you come across this when you're sitting on the other side of the table, when you're in business. I think as an auditor and an accountant, you see what your client is prepared to disclose to you. When you're in business, you see everything. And it's what you do with that information. And I think, honestly, sometimes the responsibility when you're in business can be that much greater because you are exposed to it. And if you're not exposed to it, you should have systems, risk management processes in place where it is coming to the fore. There should be no shadows in business for people to lurk in. Things from a financial reporting perspective should be clear. They should be accurate. They should be valid. From a risk management perspective, you should know what your risks are. I've always advocated from a tax perspective, tax does not belong on the desk of your tax director. Tax belongs in the boardroom. It is that fundamental. And when it comes down to global reporting, be it anti-money laundering or this new CRS requirement, whatever it is, the world is a global village. It belongs on the table of your board members. It belongs everywhere. And everyone should be aware of that. It shouldn't be something where we have a competitive advantage to find a way to circumvent regulation. I mean, for me, it makes sense. NoCloud made sense in a very strange way, if you can believe I'm saying that. But the fact that they have to regulate around people who have found ways to circumvent CRS it's unfortunate, but I think, as I say, it's human nature. Some people will always try to find a way around. They like the challenge, but it doesn't mean it's right, and it's certainly not something that should be allowed. And if you're seeing it happening on your watch, whether you be in audit or simply accounting services or tax services or in business, you should be aware of what you should be doing, and you shouldn't be allowing it. And if there's now a regulated requirement to report on it, you should report. How you should report, the regulators should give us a little bit of a steer. Shouldn't be on an Excel spreadsheet. It should be quite clear as to what you should be doing. But yeah.
Can I come back on?
Yep,
Sure.
go ahead.
What do you call Mr. Chair? We're in a complex place at the moment globally, coming out of a pandemic, levels of unemployment, the world kind of, sort of, it's hopefully a once in a lifetime kind of thing that we saw here. Margins are tight, economies are struggling at a local level, high levels of unemployment, raising interest rates from probably too low levels of sort of COVID emergency bailouts. Pressures are on. It really, it's going to require an even greater step up in terms of ethical behavior and culture because you're under pressure, because margins are tight. We have in South Africa this, what should we call it, dedicated mechanisms of trying to use less carbon by switching off electricity power plants. I'm trying to make it sound positive. We have moments where the coals doesn't
I didn't know
burn.
you work for Eskom.
It's a political space, as Peter said.
Good marketing.
But to that, there's businesses need to make alternate plans. They need to invest in alternate energy and generators and backup, and fuel prices globally are escalating, which means that the diesel to run your backups, are they still called backups, or are they just other? Yeah. The diesel to operate your main power supply sometimes. It does require, it is really going to require conscious mindset. And I think just to go to your point that you raised now, which struck to me like no-claw was probably something that was kind of inherently there, and now
Absolutely.
they've elevated it. I wonder if this is just, can be perceived if this is something that just was always intrinsically there, now just needs to be elevated again. But I think in an ideal world, maybe that's fine. But I think given the pressures that people are under, the decisions, you're going to make some ethical choices here. And it might come to a sort of combination of what's the lesser of two evils, potentially. So there is pressure in the environment for it. So as this, and I think one then understands the need for this regulation and compliance and extra reporting. But with that, it creates challenges as well. And it will be one to balance that we need to watch really carefully. It's just, and again, I'm thinking maybe of the South African market a little bit. Obviously, we know it's more closer to home, etc. But there's pressure out there. There's not an abundance of work. So, will this be an advantage? Potentially. There's some new avenues that can be pursued. But just to your small business, your kind of bread and butter type business, it's going to be interesting to watch this.
If I can, because
Yeah.
I agree it's tough, but I just think it's the right moral direction for the world to be taking. So and this is because earlier on I said this is old news to me, so it sort of just feels like bread and butter of banking. You've got two angles here. One is looking at transparency of tax reporting, transparency of structures that are going on in the world, and the other is sustainability. Transparency of tax reporting is an obvious thing to me. I look after offshore jurisdictions, and there's some negative connotations around offshore jurisdictions. And actually, as long as you are not doing anything wrong, the net outcome of this is a positive angle, because it makes sure that people understand that those jurisdictions aren't doing anything wrong, or where they are, because there's always pockets or whatever, then it is being highlighted. So there's a positive angle to the world dealing with some negative tax structuring that's been going on over time. So it's about being part of a positive moral trajectory. And on the sustainability side of things, again, that's an obvious thing to me. So we don't have regulation per se in banking around sustainability, but we do reporting on it. The group has been doing sustainability reporting, very significant sustainability reporting for quite a few years. And within my smaller part of the group, we have been doing our own reporting on that for 2 years. because it's the right moral thing to do. Because in order, A, it's the right thing to do morally, and B, if your client base now cares about that more than they might have done a few years ago, and your employees care about that more than they would have done a few years ago. So you have to do that. Otherwise, you become unsustainable as a business. Just using the word sustainable obviously twice, but so I just think yes, it's an impact. It's going to be an impact to smaller firms certainly, but it's blatantly the right thing for the world to be doing. So we may as well just get on for the ride.
So let's go to the audience. I'll reserve this question for Wilf. I'll have a.
Dear.
Can we get the microphone? While we.
Is it a real microphone?
It's
Here
a
we go.
real,
Sexy
but you have to
ball.
catch it. You
Gotta
have to
catch.
Sexy
insert
ball.
it into the audience, Garinda. You'll have to actually throw it from the front because otherwise you need somebody on the back of the head and that might be an OHS type of transgression.
We're pioneering a new,
You can throw it from there. I'm sure they'll catch it from there.
no pressure.
Well, we are accountants, not
Yeah.
There we go. That's it.
testing. Oh,
Yeah.
thank you. Sorry, so my question, seeing as we are here in the UK, huge fan of the sustainability standards. I think IFRS has done a really wonderful job. I think we're going to get some great standards out of it. My concern is more local. The ICAEW is very much like SICA, huge proponent of these standards. They're making sure that their members are staying up to date with them. The problem we have here is that while we could seriously benefit from it, I mean, for a first world country, we have an alarming amount of sewage in our rivers and in our streams and the rest. And it would be really lovely to see the environmental and sustainability impact on that stuck in a financials where everyone can see it. Yes, if anyone's here from Thames Water, I'm looking at you. My concern, though, and I know this is maybe not something that you would know directly, but maybe through your connections through SICA you have an indication of, is how likely the FRC here is going to be to adopt this, and if so, when? Because they haven't even adopted full IFRS. I mean, the latest updates to FRS have been, we're thinking about adopting bits of IFRS 9, and even then, not all of it. So, here in the UK, it's lovely. It would be a really wonderful set of standards to have. It's just, I don't know if the local authorities are going to legislate them. Do you have any insight into that?
Will seems to want
I
to take
think
that one.
that's an amusing question for me to answer, I have to say. So I am an accountant and I'm British, but I don't know the answer to that question. I'm not, so hopefully they won't take away my ACA qualification, so I might have to ask across to my colleagues.
Do you want me to?
Yeah, if you got a response for that.
So I don't know the immediate answer to that. Certainly, I think there's pressures going to mount. A complexity that's arising is there's almost a little bit of, I don't want to go call it in-house fighting, but there's duplication of efforts within the IFRS Foundation itself, where you've got the IASB doing work now on climate reporting disclosure standards and their related activities. And there's an exposure draft that's just come out of it. While the ISSB, its sister company, is about to roll out a framework for disclosing climate risk as a starting point and natural resources in that regard. And there's discussion there around, well, these guys got to be talking to each other, right? Which they will be at some point. The exact timing I can't give you. But the point being, even from an IFRS perspective, you're going to see more pressure on evolution of standards that's going to have to deal with natural environments. You'll see discussions around, now we're really going to sound like accountants, but IS 36 and the impairment indicators might likely to be expanded to include natural pollution, impact on demand on customers there. So I think it's going to be naturally coming through the financial reporting anyway. Hopefully then what we'll see is a decent, consistent framework of reporting it from a sustainability perspective. So in an ideal world, the numbers and the debits and credits will be supported by the framework of consistent reporting. But I don't know the answer to your specific question, but I think it's a case of timing. And I'm not sure whether standard setters will have such an opportunity to just not adopt going forward. I think there'll be sort of too much global pressure or if another market takes it on and it becomes competitive, then you're going to need to you sort of play that open market value type of place. So that's the way I think I see it going.
Thank you very much.
Another question there.
You've got to throw.
Eye-hand coordination.
So I'm not from Thames Water, thank goodness. But I can answer your question. So I think there's the base consultation paper that's come out on audit and assurance policies. I think it's corporate governance and audit reform. So there's the resilience statement, but it's mainly applicable to, I think, public interest entities where they have to disclose their climate risks and what they cover. And then I think the other one you're talking about including climate risk in accounting standards. I think IFRS 9 on expected credit loss models are starting to do that on physical and transitioning risks, because I think that disclosures task force, DECL, have started listing out what they have to do to show the impairments loss on certain areas. So if you look at banks who have to disclose mortgages, they actually have to do it by flood risk now, not just. So that adds on to your impairment losses.
You got another question? Well, two. You can. There we go. Look at those hands.
Hi guys, thanks for the chat so far. An electric vehicle has to mine about 5 times as much minerals than a petrol vehicle. If I'm auditing Tesla, now no one has really calculated the carbon debt that a Tesla car has on the environment. This is quite exciting. Are you expecting auditors to work this out?
Peter, I think that's yours.
And the answer is?
Yeah. I mean, I think we all, some of us left audit for a reason. I mean, there's new auditing global standards being written now, specifically to deal with these sustainability disclosures and questions and how that'll be done. One of our South African members, Prof. Warren Maroon, is actually leading that task force on the IAASB, and they're making so much progress that they've brought down the comment. The exposure draft was meant to come out, say, early next year, and they've brought it forward to around about September this year. So the guidance is coming out sooner rather than later. What the responsibility of the auditor will be, probably not to calculate it, but to, determine whether it sounds sort of fair and reasonable and what assumptions have been made and audit it compared to a framework. The nuts and bolts, the actual measurements thereof, those kind of scope 3 type of emissions, the framework should give enough clarity, what the IAASB are working on, using the IAASB as an example, to sort of identify which metrics you should be using for what and how. The direct answer to your question is I don't know what the footprint of a Tesla is. The discussion also comes from an environmental perspective. All these electric cars need to be charged, and what is charging them, and what is that offset? And it's not like the discussion is if you buy an electric car, you may not be putting in a fossil fuel yourself, but it's being powered. It's fossil fuels are going into the creation of the power that will power your car. So you've become like a second degree polluter, not a first degree potentially. So interesting questions. And you'll see the evolution thereof. I think Will wants to.
I don't know exactly in relation to the audit side of things, but there are standards that have been created over the last few years. So the list there, it is sort of acronym bingo. I've got involved in this as part of our business. So you basically end up choosing a standard. You choose a partner to work out your carbon footprints, and then you go through an audit to then establish what your impact on the climate is. And that is all within certain standards. So I can't remember which one we've chosen, one of those, that list. And so in the Tesla example, as long as they're choosing a reputable standard, then I presume the auditor can then come in and audit whether or not that process was followed accurately. So having gone through that process within my business, I can see that there is some order into how you can create the numbers and understand the impact that you're having on the environment. I would say, obviously, I'm sure there's some further development to standardise even those standards, but having gone through that process, I can see that actually there is something out there to cling on to that isn't just making numbers up.
Okay, not from an audit side, but more from evaluations advisor side. So we do, I appreciate the fact that there will be a lot more transparency in terms of the sustainability reporting, because this is something that we consider when we are coming to whether it's pre-deal in terms of looking at it from whether there's a premium or discount to a particular deal, or looking at it from a post-deal perspective, more on the financial reporting side, looking at impairment. So these are things that we consider. And I think going forward, knowing that the sustainability reporting is going to make things a lot more transparent, will help us more easily identify what a premium could be and how it can be related to a particular type of business who's operating a certain way, and also linking that also to geographies. So from our side, I do feel that this is a lot easier from our side, but also that is things that we are considering for a while back already in terms of assessing whether a business is a risk or is potentially going to be at a discount going forward. So yeah, I'm not sure if you guys have any thoughts in terms of whether this will have a wider impact from a deals perspective or impairments going forward.
I'm looking at Will.
I'm not sure I understand the question, to be honest with you. So,
just wanted to know if you potentially see this having an impact going forward from a investment side, or potentially seeing multiples move as a result, or potentially further other discounts coming into play.
So you mean, so from an investment management perspective? So yeah. I see the point. So yeah, 100% it is already having an impact. So we within our own investment management capability have sustainable funds that are making sure that they understand exactly where that money is going, because there's a much greater, obviously there's a moral imperative, as I've already said, but clients are already much more interested in that sort of thing as well. And you could also argue that there's a highly strategic play of investing in ESG-related activities, because there's a lot of money going there globally, and therefore you'd imagine that there is a trend that is an investable trend. At a group level, Standard Bank is also very heavily involved in sustainable financing across the continent, because it's a very important part of the development of Africa, and so there's a strong play in relation to ensuring the sustainability of our institution as it is linked into Africa. So yes, it's a very, very strong play. Sorry for missing your question.
Sorry. IFRS 17, when it came out, cost an absolute fortune for the industry itself, and that was in the big players themselves, all the life insurance, short-term, exactly. Are there estimates of what the sustainability is going to cost the industry overall? And do you think there'll be something like an IFRS for, like a sustainably light for SMEs or something along those lines, like you got for IFRS?
Sure, that's an interesting question. The first part's easy. I don't know what it will cost going forward. It could cost quite a lot. Depending on the maturity of your current reporting, depending on how much you already use non-financial sort of measures to report on. So I think that will require investment. I think that's quite obvious. There's no discussion yet on sustainability light or SME light. I think we're just far too early into it. But the discussion's going to come up, well, it's already coming up at the main standard setting, is sort of what level of compliance, or what are the triggers that will need to happen for when entities need to start reporting. So I think we're far away from that yet. Probably there'll be more sort of moral debates around, sort of like, should sustainability just be approaching? But soon there will be a time that the SME type discussion, sort of will come up. But I think we're far too early into that. What is interesting is, like, the IASB realized they needed a sort of committee to look at interpretations thereon, which is the IFRIC, and whether to go back and analyze whether the standards are clear enough, or whether whether they're doing their purpose, or whether they need clarity to be given, or whether in fact the standard needs to potentially be relooked at. There's just the beginnings now of a IFRIC type body, but for the sustainability standards to come up. So that kind of evolution, where there'll be sort of a body that will look at interpretation and application of the climate standard, and whether there's ambiguity or inconsistencies thereon, something like that may then lead to discussions, as it did in the IFRS environment, around whether the standards are applicable to all entities, or whether where certain entities it's more applicable than others. So I think we're just probably too early into that. I think the ISB in some shape or form has been around for about 45 years or so. It's a very mature environment. So something like IFRS 17, as an example, was a 4-year rollout planning to application, and it didn't land perfectly. In under 4 years, these guys have created a whole new body and are rolling it out. So it'll take time. It can't take 40 years, that's for sure. But I think it'll evolve. I think we'll come back to this topic in a year's time, and we'll see how much has changed since then.
It does raise an interesting point, and I know we're close to closing, but it's a question I've posed in our own parliament and to regulators as well, is that there's one glaring omission in any obligation, whether it's a standard, new legislation, and that is cost impact and the sustainability, the financial sustainability on the person you're imposing the obligation. And we've had the discussion now with the tax profession, we've had it in auditing, etc., is that that's a glaring omission. Unless the purpose and the policy is to eliminate that leg, so unless you're telling me I want to get rid of auditors, I want to get rid of tax professionals, I want to get rid of accountants, if you're saying, no, I want to utilize them and partner with them, glaring omission by politicians and standard setters is, we expect the cost benefit of this thing to be, and we expect this will not impact on the financial sustainability of this profession. And to me, that's part of the pushback that needs to happen from the public, is to say, you should not be imposing anything, whether it's a private standard setter or a government, unless you've actually answered this question. Because otherwise, the result from that. So ladies and gentlemen, we got a lot of you, 3 questions, starting at the front. That's a bad throw, Gerinda, that's a bad throw.
I was waiting for it. So Peter, following on from your point over there, so I'm a CFO in an industrial-based business. I think that's such a key point we're looking at, and we're being penalised by our auditors for not following the ESG process. We're a legacy-based business. We cargo in aviation, which is very archaic in its process. We looked at one of the key elements we look at to drive out is forklifts. So if I just look at our UK business alone, we have 150 forklifts throughout our different warehouses in the UK. So to start modernising that to go take electric, we have to then, going through a calculation, have 320 forklifts so we can run operations 24 hours, because they can't handle the maneuverability. And that's the point we're discussing, saying is, so what is the actual purpose of ESG? We're adding huge costs through our P&L, and we understand the ethical element, and we definitely see that. So we're going through LEDs through our entire buildings. So a lot of key parts we threw into our building, into our facilities. But trying to understand is, like, have they thought through the entire process, and how do we deal with that going forward? So I think it's a really key part. And who do we speak to lobby some of those questions to them to look at it?
Yep.
I mean, maybe for Milton and Peter, I think a lot of what we discussed tonight is all about the reporting again. With all due respect, we're accountants, but I think from a professional perspective and a profession as chartered accountants, I think has enough been done to talk about what is sustainability? Because I think when we start talking about sustainability, people are very quickly going to the greener environmental aspects. Now, if you go back right to the basics, I believe, to have a sustainable business, you need a sustainable economy. To have a sustainable economy, we need a sustainable world. Now, for first world developed countries like the UK, we're sitting at sustainable world space. We South Africa, with all due respect, we need to be honest, we're a developing country, not developed, we're a developing country, and the requirements to have a sustainable business within a sustainable economy might look slightly different to what it would look in the UK. And I normally say to people, well, that is the reason. Sustainability was the reason for the spring uprising in Egypt. And do we as a profession understand enough of that and drive enough of that? Because that you're not going to get in a reporting standard or a tick box exercise.
Yeah, I agree within countries, but I think the dynamic you're right, is defining sustainability. And I mean, a lot of the questions coming out of the developing world is because we are an interconnected world, we might, for example, say, oh, but the UK is sustainable and the Brazil Amazon forest is not. Where's all the wood going? Is Brazil using it? Brazil's not using it. Where's all the cocoa that's coming out of the DRC going? Is it going to the DRC? Are they making the chocolates? They're not making the chocolates. And I think that's, when we talk about sustainability, there's also a bit of a misnomer. And we already see that in global discussions. And we're already seeing that this sometimes does take on a political narrative. We saw EU introducing carbon tariffs, and it's become a playing political field. And I think that's why, and even now with the war in Ukraine, we're suddenly seeing a lot of nationalization. We're starting to use, suddenly we had a world event, and suddenly decisions that were taken saying we need to be sustainable. Maybe we don't need to be sustainable now. Maybe we can defer this a little bit. Again, are we committed in principle, as Tracy said, to what we've decided to do? And are those principles really as vested as we think they are? It's a per country thing, it's a per person thing. And I think the discussions, I think to a large extent we'd let the politicians lead those discussions. And we're just implementing as we go along, rather than pushing back and saying, but if we are going to really make this a principle, are we willing to pay the price for the principle? It's easy to talk about those people rather than the people here. So I think you're right. It is a broader discussion in society. And you raised it earlier about the youth, and we spoke about employment, etc. A lot of the youth are exactly that question. I think Tracy made that point. They will come to you and say, but I don't want to work here because I don't think what you're doing is right. And suddenly we're seeing, for example, firms come under pressure on hiring staff because the staff are feeling that what you're doing is wrong. And sometimes doing that wrong is you keeping the lights on the whole time. It's something as silly that we think, why would a trainee not want to work here because we run lights? But they're trying to live that principle. And I think that is an important thing, is that we're also going to be hit by that cultural difference from people that want to live the principle versus people that say they are principles.
Or perhaps better to answer your question, Louis, is sustainability is like the elephant in the room. It's something that we as a global economy need to be conscious of. It's a conversation we need to be having. The fact that awareness is being raised at a standards level is the right direction of travel. But I do hear your point in that certain economies will be able to bear the cost of compliance easier, quicker, and better than other economies. Yeah. So I think when we come back to cost of compliance, where we're talking, anti-money laundering, global terrorism, I mean, that's a global issue. There shouldn't be any shadows in the world where they can hide. Sustainability is honestly, it's our future, it's our planet. But the cost of compliance is the issue that I think perhaps the standards bodies need to address, and they need to address it rather quickly. Because you can't impose something on an economy that is already struggling with baseline sustainability, like in the developing economies. A country like South Africa at the moment that is struggling to keep its lights on, literally, yes, should they move to wind power? Should they move to solar? Should they move to every other kind of sustainable energy source? Absolutely. Can they even afford their own Eskom infrastructure? No. Where is the money going to come from in order to comply with a more sustainable world is a question that is going to land differently in a first world country versus a developed economy.
Another question over there.
Yeah, I'm just thinking more from an audit perspective. You're now the auditor, you get your sustainability report where all these fantastic disclosures have now been made. What level of assurance would that need to be audited to, right? Is it going to be, do we look at it from an absolute assurance perspective now? These companies have put in lots and lots of effort to report on this. Is it reasonable assurance? How do you determine what reasonable assurance is? Is it limited assurance? Just to say, we've looked at the numbers sort of from an other information perspective. There's nothing that stands out that says this is wrong. And then just more from a practical perspective than from an auditor now, you now need to build this further audit into your fee. How do you factor that in to say this is how much we're going to quote you for this additional cost?
We've checked that your sweat swaps in Asia haven't been using child labor. How do you audit that?
Yeah. Look, I mean, there's, as you said earlier, there's new global standards currently underway that will come out for consultation that will guard that. The point at the moment is currently a combination of other information and a limited review type. Nothing has come to our attention to suggest that you were using child labor. You know, that type of discussion there. From a metrics perspective, it is getting easier and easier. There are frameworks, there are models from that perspective. But just interestingly, and I think the timing is interesting, and there's obviously an intention around it. There's a new going concern standard, ISA 570, I think it is, that's coming out, that's addressing going concern from a slightly deeper perspective, not just the ability to generate profits for the foreseeable future, but broader indicators thereon. And I think the auditors are going to have to pay attention to those basic going concern assertions, which in the current world are getting harder and harder to because that's kind of forward-looking information that you're going to have to use to speculate about the going concern position now. So I think the evolution of that, I'm hoping, will at least reconcile with what the audit of the future is going to look like. But I think just the case of, similar to a reporting perspective, I think the days of just looking as audit as something that happened in the past from day 1 to day 365, and do we have the right financial position at day 365, and do the disclosures agree? I think those days are gone. The audit will evolve. It will cost more money. ISQMs already cost billions in terms of systems, and it will, which just goes back earlier to the sustainability type discussion. There's money going to invest in anywhere, but where's the source of the money going to come from? The end goal is a more sustainable economy, a more sustainable, more employment that will churn. I mean, that's the end goal, but until you get there, it's going to be difficult. So just from a pure audit perspective, there's going to be a lot of development happening in the next 2 to 3 years thereon.
If I can just make one comment on that. I think one thing that we've looked at is the application of this and how it's going to affect us, but there's an education that needs to happen, and that's a massive cost up front before we've even considered how this is going to roll out through industry, in the profession and in broader business, because the business has to be aligned to understand what the profession is trying to achieve and has to report on.
Can I make one comment on that? Just what we are doing, here's my SAICA flag coming out here, through our board member on the IAASB, what we have started doing is had a sort of, I wouldn't quite call it public consultations, but roundtable discussions on webinars where members are invited to join and listen to and hear about IAASB developments. Our particular member has got a mandate to listen to the voice of Africa. That's where he comes in to this. We'll just make sure that that information is widely spread enough. It's a nice opportunity to A, listen into it, but B, raise your hand or your virtual hand and just raise the point around what you're seeing, the kind of thoughts that you're having, the investment required. You talked about the standard setters not really identifying what these things are going to cost going forward with the practicality, these are really real conversations, and hopefully we can elevate it that way. Thank you.
Even on awareness, I think the comment on that is we can excuse it as the world and as a profession, we can excuse a lot of stuff. Lack of awareness of what's happening is not going to be an excuse. And I think that's where we are trying to make a certain, there's a lot of gaps in that. There's so much happening, things are falling through the cracks. And I think from our side, we know that a member coming to us and saying, I wasn't aware, is going to be the biggest sin at the moment. So there are going to be challenges in implementing, and nobody's got answers for those. But at the moment, the one box we should be ticking is, I knew about it, I didn't know how to do it, I didn't know, that can be excused, but saying that you didn't know is not going to become an excuse. And I think that is our first challenge, is exactly that, is first getting people to actually understand what is applicable to them coming up, for them to start thinking about it and implementing it, and then we can have the second discussion, is how do we sit around a table and start getting to solutions. Another question behind you?
Yeah, is this on? Yeah. So I just have a question, because I think coming from a more data management perspective, I understand there's a moral compass and a need to kind of fulfill sustainability, and I think a lot of companies are doing bits and pieces but are not necessarily tracking it. But without a central body kind of requiring and setting down a standard to say this is what needs to be reported, how are we consolidating this information and actually using the data to better climate change? Because without that, like as a person, a young person, I think you're asking for it as a requirement, but you're not necessarily saying what you're doing with that, as a lot of it's commentary.
Yeah, I think otherwise, I think Milton's probably best placed, but I think that's exactly that. There's a lot of discussions happening. We saw the alphabet soup. People are doing, it seems, people are doing things for the sake of doing things. When we spoke about, I mean, we had the ISB chair back in South Africa last year.
Yeah.
And I posed the question, the BEPS project, I mean, it's big, the OECD. And the basis of the BEPS project and a lot of that reporting is financial data. And we asked him, but did the OECD come to talk to you about that? To say, well, given that we're going to use accounting as the basis for this, or accounting profits, and his answer was no. Now, how did the OECD not speak to the largest accounting standard setter if that was going to be the basis of the reporting, that they were going to trace this huge global initiative? And exactly that. And I think to me, that's one of the big concerns, is exactly that. People are going to start giving up on these things if they're seeing that governments are doing this and standard setters are doing this for the sake of doing things. And if you lose that momentum, and we see that a lot from the Institute, you've got a small window to get people on board and keep them on board. If you start losing them, we take something like our infamous e-tolls. Never got the people on board, and you lost them, and at some point it's going to fail. I can promise you it will fail. So I think that is one of my concerns as well.
Yeah, e-tolls are a good example. That's one reason we said, no, we didn't know. Going back to your earlier point, we weren't consulted. But there's a stick and carrot approach as well. And I mean, we don't want to get to a point that it's always the stick that threatens, because you don't just want to go the compliance route. We're in a position locally and globally where the stick is not out there yet. So we don't want to get to a point that the stick comes out. And then we adapt based on what now the regulatory requirement will be and what the auditors specifically will want. So we're in a transition phase at the moment where you've got global standards about to be launched, and you've got global auditing standards on the way out. You've got stock exchanges saying, well, we're going to wait and see. You've got securities exchanges saying, well, we'll wait to see what the auditors are wanting. So the auditor wants to see what the stock exchange will want. The stock exchange wants to see what's going on at the framework. The foundation's going to say, well, who's going to adopt it and take it on? So there is a little bit of hurry up and wait at the moment. We don't want to be in a position, though, that we get mandated, it's this, and then we now need to react to it. It'll be easier to do it that way, because you kind of need to know what your target is and what you want to get to it. But then you're into just a compliance mindset rather than a proactive type sustainability mindset. So there is a tension. Bringing it back to a SAICA perspective, we're being more proactive in trying to get alignment through our members in business forums, through our senior partners forums, through our forums, bringing in the stock exchange and the auditors to try understand, let's say, Direction South Africa in this. Because if we wait, as I said, if we have to wait for Parliament to come across to do it, well, firstly, Parliament will probably consult with us because we've got the expertise in it. But even if they don't, we really want to wait until we're dictated 2-3 years down the line there. So, you know, it's a bit of a chicken and egg type of approach there as well. Goes back to, I think, some of what Tracy said earlier on. We are inherently people governed by a code where ultimately I think we understand inherently the difference between right and wrong and what should and shouldn't be done. And I think through this process of extra disclosures, etc., judgment's going to come up to it. It gets down to the individual, it gets down to the corporate, it gets down to the decision maker. So we're in this uncomfortable phase at the moment, but I think let's try to be progressive in the uncomfortable phase rather than waiting for the big stick to come out. As I said earlier, if our sort of approach was to we'll monitor this through the disciplinary process, it's too far down the line and damage is done already.
And can I just add that, so I'm personally, from a very personal perspective, I feel very strongly about people taking these things seriously. Greenwashing is something that really irritates me as an example. And so I have been very, very pleasantly surprised. I can't talk about the accounting standards. Sorry, I know that's not good for this room. But in relation to attaching yourself to standards, which was your question, there are standards that exist. So you go through this process and they have a long list of acronyms, but actually underneath it, it all goes back to COP26, COP20, whichever one it was. 27, right? So out of that, there was a list of standards that then have been adopted as part of the mechanisms that those acronyms have used. So I was very, very pleasantly surprised. Sort of going into it, I care about it, but I was cynically trying to work out whether or not this actually meant something and whether it would create action and whether it was something that people were getting around. And my view, having gone through the process with my business, is actually there is currently a set of standards that you can attach yourself to that gives me comfort that if everyone does that, then it will have a positive impact to the world. Now, I'm sure those standards will evolve and they'll get better, but they are there and you can attach them to them today.
Yeah, ladies and gentlemen, that then brings, there's still another question, last, but I think let's run in. We got some time to network and ask questions later on. Let's wrap this formally up. So again, from our side, I think thank you to Standard Bank for graciously hosting us and enabling this discussion. And hopefully it's one of many that we are still going to have on this topic. Again, you need to take responsibility in at least talking to the awareness side of it, and we will try as much as to help you. We'll be having more drinks and discussions informally on the side. So greetings to and a good evening to our members online as well, for those who take the log, and for those of you in the room, thank you again for your time, and let's have a few more chats. If you ain't got any concluding remarks, Karinda? So there are even wards for asking good questions. So goodbye and good evening.
And if we answered well, do we get a...
You get to have a drink with them.
Okay. Hey, free job.
Sustainability.
Sustainable.